Namaskar, good morning. Today I am going to discuss the most important topic in economics, which is known as balance of payment. It is very important for UG and PG students, and this is very helpful and this is very relevant in all the subjects like macro, international trade, Indian economy, public finance. So it is very important. So let's discuss what do we mean by balance of payment. And before that, we have to know for today class, we have to know what is the meaning of balance of payment, features of balance of payment, and the difference between balance of payment and balance of trade. And other portions will be discussed in the next class. So let's start. What is the meaning of balance of payment? So balance of payment is a systematic annual record of all economic transactions of exports and imports of both goods and services in a country in a year. That means balance of payment is a very systematic record. So for the convenience, we can say balance of payment is a systematic record of all economic transactions. That means visible as well as invisible items. That means in a period of time also and between one country and it is dealing with the rest of the world. So we can say balance of payment is a systematic record of all economic transactions, visible as well as invisible items, and it is dealing with in a period of time. That means it takes into account annually, and it is dealing with the rest of the world. That means suppose India is trading with other countries, then we can say other countries are the rest of the world for India and other countries relationship are based on, that means the relationship between India and other countries is based on the international trade. So here we have to take into consideration that balance of payment and balance of trade are the same or different. Obviously, balance of trade is different from balance of payments. So balance of trade means what? Balance of trade is a systematic annual record of all economic transactions of exports and imports of only visible items, not invisible items. It takes into account only visible items. What is visible items? Visible means we can say that those what we can see, touch and feel. Invisible items means what we cannot see, we cannot touch, just we can feel. That means all types of material goods are included in visible items and all types of services are included in invisible items. But balance of trade does not take into account the invisible items or services. Only visible items are coming into balance of trade. That means balance of trade takes into account only visible items, means only material products, only merchandise products. That means balance of payment is a systematic record of exports and imports. What is export? That means we have to receive for our exports and we have to make payment for our imports. So it is a systematic record of receipt and payment. Receipt for exports and payment for imports. It is a very systematic record of receipts and payment. It is a very systematic record of exports and imports of only goods, that is known as balance of trade. Obviously, balance of trade is a narrower concept than the balance of payment, and balance of payment is a broader concept than the balance of trade. There will be no doubt. So here, balance of payment is a systematic record of exports and imports of both goods and services. Goods and services means both visible as well as invisible items. So, balance of payment is a systematic record of all economic transactions. That means of all visible items and invisible items in a country in a year. So, here let's discuss the features of balance of payment. So balance of payment is that means all the features which are which should be studied, because if we know what are the features of balance of payment, it's very easy to understand what is the balance of trade and balance of payment, and the equilibrium of balance of payment, the disequilibrium of balance of payment, the causes of disequilibrium of balance of payment, the methods to correct the disequilibrium balance of payment. So first, today class is based upon the, I've already told you that meaning, features, difference between balance of trade and balance of payment. And in the next class, I have to go for the different means your the structure of balance of payment and the different accounts, you know, that capital current account and capital account, and different items of current account, different items of capital account. After that, we have to go for the causes of disequilibrium balance of payment, and after that we have to study the methods to correct. Different types of methods are there to correct the disequilibrium balance of payment. So here first we will discuss the let's discuss the features of balance of payment. So first feature is that it is a systematic record of all economic transactions between one country and the rest of the world. It is a very systematic record, there will be no doubt, because it is systematic, because there will be no unnecessary, there will be no unnecessary data will not be taken into account. That means there will be very much systematic record. That means export side, import side, it is very systematic account. It means what are the items of exports, what are the items of imports should be taken into consideration while we are calculating the balance of payment and balance of trade. That's why there will be two sides systematically, export side and import sides. That's why it is known as it is very systematic record of all economic transactions. Always remember, your economic transactions, it means visible items, invisible items, and also your capital flows. These are known as transactions, exports, imports, capital flows, all these are coming under this economic transactions. And second one is that it is dealing with both visible and invisible items, because now we'll study balance of payments. So balance of payment takes into account both visible as well as invisible items. So visible, you know, means your material products. I've already told you that material products are coming under the visible items. What we can see, touch and feel, all types of material products are coming under visible. And invisible means those what we cannot see, we cannot touch, just we can feel this. That's why all types of services are coming under the invisible items. So you can say transportation, banking, insurance, gold transactions are known as the invisible items. But in case of visible items, merchandise products, material products, you can take into account. And it relates to a period of time. Balance of payment deals with a periods of time. That means generally it takes into account annually. Generally it takes into account annual statement. This is annual statement. That means it is a flow concept. Always remember, balance of payment is a flow concept, because it is not dealing with a single point of time. Rather, it deals with periods of time. That's why this is known as the annual statement. Next, there will be, this is very important, double entry bookkeeping system. Balance of payment takes into account the double entry bookkeeping system. What do I mean by this? There will be double entries are there. There are two entries are there. Credit entry, debit entry. Credit entry means all types of receipts are made by the country is known as your credit entry. All the payments will be made under the debit entry. So receipts for what? Receipts for exports and payment for imports. So there are two entries, credit entry, debit entry. Export entry, your import entry. Your credit side is the export side and debit side is your import side. Credit means plus, debit means minus. Credit means positive, debit means negative. Credit means surplus, debit means deficit. Credit means favorable and debit means unfavorable. Always there are two sides. Balance of payment deals with the two sides, and also balance of trade also deals with two sides. So balance of payment deals with the two sides. First one is credit side, second one is debit side. Credit side means your export side and debit side means your import side. there are two sides: receipt side, payment side; export side, import side; favorable side, unfavorable side; surplus side, deficit side; plus side, minus side; positive side, negative side. So that's there are two entries, double entry bookkeeping system. Next one is that when your receipts is equal with the payment. Look at the blackboard, whiteboard. Means when receipts is equal to payment, means receipts for exports and payment for imports. When receipts is equal with the payments, there will be equilibrium in balance of payment. When export is equal with import, export means X and import means M. When export is equal with import, so this is known as balance of payment is balance. When export is not equal to import, that means the X is not equal to M, that means the balance of payment is the unbalanced. So export is equal to import means the balance of payment is the balance, and it is otherwise known as the equilibrium in a balance of payment. And when export is not equal to import, this is known as a disequilibrium balance of payment, and balance of payment is not balanced. So your disequilibrium is also divided into two types. One is surplus, another one is deficit. Surplus comes when export is greater than import. That means when export X is greater than import, this is known as surplus. When import, that means M is greater than X, this is known as your deficit. And both the surplus and deficit are coming under the disequilibrium balance of payment. So, when export is greater than import, when receipts is greater than payment, this is your surplus balance of payment. When export is less than import, or you can say that export is less means obviously receipt is less than the payment, or payment is greater than the receipt, or import is greater than the export. This is otherwise known as your deficit balance of payment. And both the deficit and surplus are coming under the disequilibrium balance of payment. So our problem is that balance of payment is always balanced from the accounting sense, but from the practical sense, balance of payment is not balanced. You know that balance of payment is the balance from the accounting sense. That means balance of payment should be balanced. But from the practical sense, we can find that balance of payment sometimes surplus, sometimes deficit. So deficit means surplus is not our problem. Problem is lying on the deficit. Means when our import is greater than export, this is also our problem. This is most important problem, because this is known as deficit balance of payment. This is very dangerous situation for the country. So always we want to have surplus balance of payment, so that with the different types of measures are there which will be taken into account, or which will be adopted to reduce the to remove the disequilibrium, to correct the disequilibrium balance of payment. And your last one is that account, you can start. I have already told you that balance of payment is sometimes you can it is imbalanced. That means sometimes balance of payment is not balanced. So from the accounting sense, balance of payment is balanced, but from the practical sense, balance of payment is not balanced, which have been discussed in the last feature. And after that, we have to understand, or we will focus on the balance of payment and balance of trade. I have already told you that balance of payment and balance of trade are not the same thing. That means balance of payment is different from balance of trade. Always remember, there will be questions in the exam that can you say balance of payment is same as balance of trade? No, the answer is no. Balance of payment is not same as balance of trade. That means the balance of payment and balance of trade are different things. For example, balance of trade is a narrow concept and balance of payment is a broader concept. Balance of payment is because it takes into account both visible as well as invisible items. That means the material products and the services. All types of things are coming under the balance of payment. So obviously balance of payment is a broader concept than the balance of trade, and balance of trade takes into account only visible items or material products. And similar situations will be found out in balance of trade situations. Means balance of trade is also balanced when export of visible items is equal with the import of visible items. Then the balance of trade is balanced, but export and import of visible items are not equal. Balance of payment is imbalance, and also balance of payment, balance of trade is imbalance. Balance of trade is imbalance. So balance of trade is imbalance means it is also divided into two types. Another one is the surplus, another one is the deficit. So balance of trade is a surplus means when export of the visible items is greater than the import of visible item. This is surplus side, is a very good sign. And when import of the visible items is greater than the export of the visible items, this is negative, and this is known as deficit balance of trade, which is not good for the economy. That's why balance of trade is also same as balance of payment for the equilibrium and disequilibrium point of view. And balance of trade and balance of payment, you know, and we have to focus. That means the balance of payment is a balance or imbalance or disequilibrium or equilibrium with the help of the diagram. So let's discuss the diagrammatical part of the balance of payment and balance of trade. I've already told you that balance of trade and balance of payment same means equilibrium and disequilibrium. It's not same. I have already frequently told you that balance of trade and balance of payment are not same, but balance of trade is a narrower concept than the balance of payment, and balance of payment is a broader concept than the balance of trade. So here balance of payment, that means balance of payment is a balance. That means balance of payment is a balance, and that is balance of payment is not balance, of course, on balance. And balance of payment, when it is balance, when X is our export, M is our import. When export is equal to import, balance of payment is a balance. When export is not equal to import, then balance of payment is the unbalance. And balance of payment is unbalance means what? It is divided in two sides. Sometimes your surplus, and next one is your deficit. So surplus occurs when export is greater than import. Deficit occurs when import is greater than exports. It is easy to understand with the help of diagram. That's why I am showing this diagram. Your surplus means export is greater than import, and deficit means when import is greater than exports. And surplus means this is a favorable side. Deficit means this is the unfavorable side. Surplus means this is the positive side, and deficit means negative side. That means this is plus, this is minus. This is credit side, this is debit side. This is surplus, this is deficit. This is favorable, this is unfavorable. There is a credit side, there is a debit side. That's why I have always told you that double entry bookkeeping system, which is the most important feature of the balance of payment. And similar diagram is also here for the balance of trade. That means instead of balance of payment, we can write that balance of trade. So balance of trade is also divided into two types. It also happens. That means in case of balance of trade is a balance of trade is not balance, means unbalance. Further, when export is equal to import of only visible items, so balance of trade is the balance, and this is not equal. That means the export of visible items is not equal to import of visible items. So balance of trade is unbalanced. Sometimes export of visible items is greater than the import of visible items. That's why this is surplus. Okay, this is all about your meaning, features and difference between balance of trade and balance of payment. Other parts, that means your structure of balance of payment, your different types of accounts, current account, capital account, different types of accounts, different items of these respective accounts, and causes of disequilibrium balance of payment, and types of disequilibrium balance of payment, and methods to correct the disequilibrium balance of payment, which will be discussed in the next class. So thank you so much, and please visit my YouTube channel, and also if you like, share and comment, then this will encourage me to make the videos in the subsequent time periods on the basis of different types of economic concepts. Thank you so much.